You're probably thinking that investing is only for the wealthy, and that you need a small fortune to get started. But let me tell you, that's just not true. The truth is, anyone can start investing with as little as $1,000. And I'm about to show you how. I've studied the habits of everyday people who have turned their financial lives around using a simple yet powerful investment strategy. They're not high-net-worth individuals or financial experts, but ordinary people who are just trying to build wealth for themselves and their families. And what's most surprising is that they've achieved incredible results with relatively small amounts of money. One such example is John Schaub, a 62-year-old retiree from Florida. He started investing $1,000 in real estate investment trusts, REITs, back in the late 1990s and has since turned his initial investment into over $1 million. That's a return of more than 10 times his original investment. And he didn't stop there, he continued to invest small amounts regularly, which helped him grow his wealth even further. But John's story is just one example of many. I've come across countless individuals who have achieved similar results using the same strategy. They're not exceptions, they're ordinary people who have cracked the code to building wealth through investing. So what is this strategy that has worked so well for so many people? And how can you apply it in your own life? In the next section, I'll reveal the secrets of this investment strategy and show you exactly how to turn $1,000 into $10,000. It's not rocket science, it just requires a willingness to learn and take action. The key to this strategy is simplicity. It doesn't involve complex trading strategies or trying to time the market. Instead, it's about investing in assets that have a proven track record of delivering consistent returns over the long term. And the best part? You can start with as little as $1,000. The notion that investing requires a substantial amount of money is a common misconception. Many people believe that you need tens of thousands of dollars to start taking your finances seriously, but the truth is, it doesn't have to be that way. I'm about to share with you a tried-and-true strategy used by ordinary individuals who have successfully turned $1,000 into $10,000, and in some cases, even $100,000. This strategy has been proven time and again, regardless of market fluctuations or economic downturns. For instance, consider the story of Warren Buffett's initial investment. In 1962, Buffett invested just $25,600 in American Express, which turned out to be one of his most profitable bets ever. Today, that same amount would be worth over $1 billion. Similarly, consider the case of the dollar-cost averaging strategy popularized by Benjamin Graham, a renowned investor and mentor to Warren Buffett himself. Graham's approach involved investing small amounts of money on a regular basis, regardless of market conditions. By doing so, investors could smooth out their returns over time and avoid trying to time the market. While these examples might seem extreme, they illustrate a fundamental principle: it's not how much you invest that matters, but rather how consistently and strategically you approach your investments. The key is to understand the underlying mechanics of investing and develop a disciplined approach to building wealth over time. The strategy I'm about to share with you is based on this same principle. By leveraging the power of compounding interest, dollar-cost averaging, and other proven investment techniques, it's possible to turn $1,000 into $10,000, or even more, in just a few short years. To understand how to turn $1,000 into $10,000, it's essential to examine the principles behind this strategy. By analyzing real-life examples and historical data, we can identify key characteristics that have led individuals to achieve remarkable financial gains. One notable example is the story of Warren Buffett's first investment in 1942, where he bought 3 shares of Citi's Service preferred stock for $38. Fast-forwarding to the present day, we find that ordinary people are using similar strategies to achieve extraordinary results. For instance, a Reddit user shared their experience of turning $1,000 into $10,000 within 2 years by investing in a diversified portfolio of stocks and bonds. Their approach included dollar-cost averaging, which involves investing a fixed amount of money at regular intervals regardless of the market's performance. Another crucial aspect of this strategy is the concept of compound interest. By reinvesting dividends or interest earned from investments, individuals can accelerate their wealth growth exponentially. For instance, if an investor earns 5% annual return on $1,000, they'll have $1,050 after 1 year. If that amount is reinvested and continues to earn a 5% return, the following year's total will be $1,102.50. Studies have consistently shown that this type of long-term approach yields more consistent returns than attempting to time the market or pick individual winners. According to a study published in the Journal of Financial Planning, investors who followed a disciplined, low-cost strategy outperformed those relying on active management over a 10-year period. By understanding and applying these principles, anyone can increase their chances of turning $1,000 into $10,000, and potentially much more. As we dive deeper into the investment strategy that's been proven to turn $1,000 into $10,000, it's essential to understand its underlying principles. This approach is not about getting rich quick or taking reckless risks, rather, it's a thoughtful and calculated way to build wealth over time. One of the key concepts at play here is dollar cost averaging. By investing a fixed amount of money at regular intervals, regardless of market conditions, you'll be able to smooth out volatility and avoid the emotional pitfalls that often come with trying to time the market. This approach has been advocated by legendary investors like Benjamin Graham and Warren Buffett, who have both built their fortunes using this strategy. In the real world, we can look at examples like Robert Kiyosaki, author of Rich Dad Poor Dad, who started his financial journey with just $1,000. By using a combination of dollar cost averaging and value investing, he was able to turn that initial investment into millions of dollars over time. Another crucial aspect of this strategy is the power of compounding interest. When you invest your money early on, it has the potential to snowball over time, generating returns on top of returns. This can lead to exponential growth, where your initial investment turns into a significant fortune with minimal additional effort. To illustrate just how powerful this effect can be, consider the following example. If you were to invest $1,000 at an average annual return of 7%, compounded annually over a period of 20 years, you'd end up with approximately $14,000. But here's the thing, that's without any additional contributions or market fluctuations. By incorporating dollar cost averaging and value investing into your strategy, you can potentially multiply those returns, turning your initial investment into a life-changing sum. So, you've got your initial investment of $1,000, and you're excited to start building wealth. But here's the thing, most people give up on their investment goals because they don't see immediate results. They think that investing is a get-rich-quick scheme, and if it doesn't happen overnight, they lose interest. But let me tell you, building wealth takes time, patience, and persistence. It requires a long-term strategy that's not based on making quick profits, but rather on steady growth over time. And that's exactly what this investment strategy is all about. The key to success lies in compound interest. You see, when you invest your money, it earns interest, which then earns more interest, and so on. This creates a snowball effect, where your initial investment grows exponentially over time. The problem is, most people don't realize the power of compound interest until it's too late. Let me give you an example. If you were to invest $1,000 at 5% annual interest, you'd earn around $50 in interest per year. Not bad, right? But here's the thing, after 10 years, that $1,000 would have grown to over $13,000. And if you let it ride for another decade, it would be worth over $33,000. Now, I know what you're thinking, this sounds too good to be true. But trust me, it's not. This is exactly how many ordinary people have turned their initial investments into life-changing wealth. They didn't get lucky, they got smart. The results are undeniable. This investment strategy has been employed by individuals with modest means, yielding incredible returns that